Lundgreen's Invest has secured a historic quadruple exit for its high-tech defense fund. Following the sale of 4 investments to the Danish defense company Omni Capabilities, the fund's value jumped by as much as 40% in just one day. The good news? This evergreen fund is officially open to new investors with an exit possibility every 6 months. Visit lundgreensinvest.com to know more about this co-investment opportunity. Today is the 25th of June 2026, 10:20 a.m. CET, 4:20 p.m. Manila time. This episode, we talk about Japan quickly gaining customers for defense exports, a brief global sell-off of AI stocks, the latest on MSCI and Indonesia, and oil prices back to pre-war levels. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgreen, the founding CEO of Lundgreen's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgreen's Investor Insights. Join us as we analyze developments in major economies and financial markets globally. Hello to our audience, and hi Peter, welcome back to the show. What's been keeping you busy this week?
Hi Mel, a lot of things. We are busy on, our new defense company. But actually we founded it together with our cooperation partner Normark Defense and basically our defense fund. And that is getting a lot of attention, and new investors are coming on board in this new company. That is very exciting actually. Let's say the markets are keeping us busy, right,
Yes.
Mel? And then we have sort of now it's a summer holiday season here in Denmark from next week already, and that always gives a bit of sort of pre-holiday sort of things that needs to be finalized and whatever. What about you?
Well, Peter, it's the tail end of summer in Manila, so maybe the sun is gonna move away from us and towards Europe. It's we're getting into we're getting into the rainy season, and as far as work, of course, always exciting apart from the many movements in our funds. We at Lundgreen's Investor Insights are also this close to releasing our latest magazine. So that will be out very, very soon. We're putting China and Southeast Asian economies in focus. A lot of the topics are, the constantly moving developments that we mentioned in our podcasts. And yeah, so we'll put that into writing with more, lengthier insights that's easy to read, maybe bedtime read or like waiting room read. So once that's out, it should be very interesting for our subscribers.
Yeah, I almost can't wait. It's always so good. So
Yeah.
looking forward to receive it and to read it.
Yes, thank you,
For
Peter.
sure.
Actually, let me get started with this episode. We did mention the defense fund, and the defense industry in general has been very upbeat in the last few years or so. It continues. Here in Asia, one of the more interesting developments in the last couple of days has been Japan. So we all know that Japan is ahead in terms of high-tech manufacturing, but it has lagged peers regarding defense exports, mainly because its long policy of pacifist post-war policies regarding defense manufacturing and exports have been so restrictive. That's not the story anymore. In April, Japan has relaxed its rules on defense exports, and very quickly, the world is responding quite positively. Report from the defense minister in Tokyo is saying that a European country or several countries are already in talks to open factories or collaborate on production in Japan for defense equipment. In April already, Australia has purchased like ships from Japan, and there is a separate report saying that a Portuguese company, it's called Tekever, I hope I pronounced that correctly, is already looking to source the production of unmanned drones in Japan, and then that's looking to be their hub for Asian purchases or Asia sales. Yeah, we have talked about unmanned drones quite a few times already. It has been a key feature of recent conflicts where it's safer for relatively safer to send these unmanned aircraft to surveillance or maybe even for scouting and for monitoring. So now that it's gaining popularity, that company is trying to go into the Asian market. It has partnered with Marubeni, so it's like a Tokyo-based conglomerate. So it's like the best of the both worlds in that situation. They're counting on European research or expertise together with sensor technology in Japan. So it's a very exciting space. And what we see here is the Europe-led, or should we say Western-led, increasing attention and investments and demand for defense spending and equipment is spilling over to Asia, and there is really great demand from this space, and likely more defense startups in Japan, possibly for the rest of Asia, will emerge in the next few years with this step.
Yeah, we can only encourage governments to buy some technology-heavy defense gear. Yeah, so that's that's what we like. Yeah, but it's interesting. It shows something about how extreme the demand is for within defense. So it's basically what our takeaway from it, and also again the demand predominantly comes out of Europe.
Yes.
So this is where it's worse to be in the business, so to say. Yeah? As for the growth potential. So, but extremely interesting actually.
I did touch upon technology, Peter, and apart from defense, one of the bigger, more, I guess, more global push in terms of equities has been AI. But in the past few days, actually on last Tuesday, there has been a brief AI sell-off globally, sent a few stock markets bleeding last Tuesday. The Nasdaq was down 2.2%. The Japanese Nikkei 225 is down 4%. Korea's stock exchange, which has been really lifted by AI optimism in 2025 and most of the year, was down over 10%. Actually, it tripped the circuit breaker because, yeah, valuations were falling that day. But yeah, the question here was, is it a wider sell-off or is it merely a correction, and should people suddenly move away from AI investments? We think not. As we've seen, well, it's now Thursday and stocks have somewhat recovered, not fully, but it has these sharp drops, 1 day drops, have been reversed, mostly, if not fully already. We see it as a correction where after the whole excitement since last year and the SpaceX surge from earlier this June, it's likely profit taking after solid first half returns, and double-digit increases in valuation were, of course, it can't go on like that fast for a long. But this is temporary, of course. There's also some jitters about the flip-flopping progress in the US-Iran conflict, though later on this week, it has looked better. Oil prices are down again. So we do not see a wider sell-off in regarding AI stocks just yet. And as we look at year-to-date figures for major stock markets, it's still very much favorable. We mentioned Nasdaq, it's the tech-heavy US index, it's still up 10%. The Nikkei 225 up 44%. Korea's is double from last year in terms of the main composite index. So it's not really that alarming or alarming at all. It's not alarming at all. There was a blip, yes. But it's more of a buy the dip situation as far as stocks are concerned. Of course, what we always say is we take well considered risks. AI is the shiny new toy, that's true, but it would be of the best interest of investors to really, look at track records and reputations and results regarding this space. But it remains to be a high growth and very exciting for portfolios of investors.
Sure. The 10% sell-off in South Korea a couple of days ago. It looks extremely dramatic when it happens. It, of course, gets all the headlines, but if we relate it to how the market has gone up in South Korea, it is not even a correction. It is has to come after such bull market, yeah. So we see it, as you say, yes, things are a bit rough and tough in the AI sector in the way that we're seeing as a sort of extreme gains, yeah. It's very high volatility. Some of these extreme gains they will come low, I guess. It can't be different. It simply expresses that the high volatility. This will happen if people are investing into to speculative sort of stocks and all this stuff, and in general speculative markets. When we talk about AI, there will be higher volatility, and there will be nervousness, and there will be. We won't call them extreme because it's what happens. So we're not nervous. As I say, we're actually not nervous on the sector as well. So more needs to happen, and we're not there yet. As it's extreme gains that have been taken. So it is, but it's generating higher volatility for sure. It will represent higher volatility the rest of the year.
I think Korea's decline was kind of a double whammy for the day. The same day that the stocks fell, the MSCI released its, I guess, decision on their long-standing request to be upgraded to a developed market status, but they didn't really get that yet. So maybe that's another reason why it's sharper than the rest. The drop was sharper than the rest of the major stock markets across the board. But yeah, doesn't really change anything as far as South Korea's appeal is concerned. More that they didn't really get the best outcome for them, but it was it was a bad day, but stocks were quick to recover in the succeeding 2 days, which we've seen so far.
Yeah.
And on the topic of MSCI, Peter, much awaited but apparently postponed was the platform's decision about Indonesia. So we have really talked
Okay.
about that in detail in this podcast, and they were at risk of being downgraded, the whole Indonesian stock market to frontier market status, which would be the lowest of the rungs, but they got some reprieve. The decision will not be due until November. I think that's a recognition in part that the government is doing something about it. So the concerns were sweetheart transactions or sweetheart equity trades that benefited a select privileged few. That's equal to valuation manipulation in the Indonesian stock market, which is the prevailing concern regarding Indonesian assets.
Yeah. Now we have covered the story sort of ongoingly here in the podcast. The potential MSCI downgrade of the Indonesian stock market from being an emerging market to a frontier market. The reason is that the liquidity is not good enough in the market, and too many large companies are not offering enough of the shares to the public. So they're simply too. I'd say it's not a fully traded stock, or you could also say it's too easy for the founders or the majority shareholders to manipulate the stock. And this is what has been going on. If the Indonesian stock market could get out of the squeeze, it's not so far yet. Yeah, and the MSCI postponed this decision to November. Maybe not. But we will still see Indonesian stock market as uninvestable. It's not where we could say, okay, it's back on the list for Southeast Asia, and we are talking about the largest economy in Southeast Asia. So it's not just sort of a a small economy or around the corner economy. No, it's mixing. So it's actually serious. But the risk is also even the market has gone down 30%, around about 30% this year, and a lot of other corresponding markets are actually up.
Yeah.
And it could be tempting to buy a sort of big share, another big share, sort of. But these are the shares that can be they're actually embedding a lot of risk. But because they could choose to say, okay, we delist, and then you, as an investor, are sort of getting out in the Indonesian market, and then everything is possible. Yeah, that's dangerous. Then this is why this story is ongoing, interesting, and it's important for investors to we think to understand. Yeah. So this is it.
Yes. So we'll keep watching out for the developments in the Indonesian stock market and how MSCI will look kindly or otherwise about their fate. So that's a couple of months away. But of course, the ideal route would be for Indonesia or the Indonesian regulators to step up the rules where needed, especially to clamp down on insider trades, basically, because that's
Mm.
been the issue that's been flagged about Indonesian assets. On to
Mhm.
a bit of a better, or I guess a more positive story. We have been talking about oil prices and the whole Middle East conflict. We did say last week, and it did happen, that the signing of the agreement did not push through between US and Iran. But still, there has been positive developments over the last couple of days, mainly concerning oil prices. We are apparently back to the pre-war level of $70 a barrel. The question is if it will hold or it will continue, or will it spike back up, and how fast will it change directions?
Sure, there's no doubt that if all of a sudden the U.S. or President Trump and are unhappy with the peace negotiations, or they don't see anything happen, whatever, there could be some setback in terms of bombings taking place 1 or 2 days. It is, as we see, this is sort of fairly limited. There's not a lot, at least.
Mm-hmm.
And we see the current move downwards in oil prices is exactly what we have been expecting. I think there's a lot out there who had expected that oil prices at some time will come lower because US
Mm-hmm.
and Iran will fight each other at some time. So it's happening more than not, so to say. So there is a good, as we have a sort of a primary scenario that
Yes.
this will actually happen, and stock prices will come lower. The current pricing in oil, this is probably where sort of what we call a natural level.
Mm-hmm.
Can it support the stock market? Yeah, we would say, as you say, we are back in February, yeah, where we were, and then we would just say the world is reset and we are back on track. But the key is not what's happening. That is a challenge. We have now we discussed the AI and tech swings and say, okay, that is a separate factor in the stock market. But should the stock market shoot 10-15% higher on the oil price because people were nervous for the global economy due to the higher oil prices? Yeah, maybe it should. Maybe 10% is more realistic. Yeah,
Mm-hmm.
but the reality is that the world is not just resetting and saying, okay, we are back to February and then we
February.
just steam ahead. Yeah, we did
It's not
touch.
as easy. Yeah.
We did actually touch for some episodes ago that we were starting to look to beyond the sort of this oil price crisis or oil crisis, depending on how we are looking at it. And already at that time, we sort of recognized that the world is, every time we have this kind of temporary crises, the
Mm.
world is getting hammered almost. Yeah, it's really getting beaten up? It's a good question. Why is it so? And what should we do?
Mm-hmm.
Yeah, why is it so? It is so because too many countries are too close to 0% in growth. That is our main thesis, is simply if an European economy is trading around, okay, 0% in growth, sort of give and take, then there's no force to recover. So there's no recovery force, so to say.
No
And
momentum, yeah.
there's the economies are just getting hammered, uh, but then they just sort of adjust to be at the new level where they're hammered at, and this is a heavy problem. There's no, as you say, there's no underlying momentum. There's no underlying power to bring things back just where they were 4 months ago. It requires a stronger economy and some economic growth. And it can be that, let's say, the Philippines, where it's one of the countries in the world that is really hurt by high oil prices. Yeah.
Mm-hmm.
But there will be growth to recover after. Okay, there have been done some damage, but it will come back.
Yes.
And this is because there's enough momentum in growth and there's enough growth to say, okay, we pick up again. Actually, despite all the risks we talk about in the Chinese growth, this will also happen there. Interesting it is. It will simply spark to a development that one of the big, as a mega trends we're talking
Mm-hmm.
about on the middle class, the growing middle class around the globe. Yeah, it's growing, and more and more people are getting included in the middle class. But to raise within the middle class, to come up in at least personal income, it will be most easy for the countries with growth, as a fundamental growth momentum, like the Philippines. The countries with zero growth, they're sort of getting setback, but cannot move. And that's a problem. It is a serious problem. So we will feel a difference now compared to the time before the oil
Mm-hmm.
prices were at the same level. And that is just 4 months ago. And this is a problem. This is a problem for let's say also particular Western Europe. Yeah, it's a bit sort of a high level view, yes,
Mm-hmm.
but it's actually what we see, and this
Yes.
is fitting extremely lot into our talk about how the global middle class is growing and how the internal movement in the global middle classes.
Mm-hmm.
The news release for 1 day ago, 2 days ago, and now we do discuss Germany, yes, but it's also the biggest economy in Europe, and it's fair enough to take it as an example. 17.7% of all Germans do not feel they have money to travel, not even a short weekend break holiday.
Ooh.
Wow. That is
Yeah.
these numbers you don't hear in the Philippines, yeah. You travel. We know that there are people living at absolute minimum in the Philippines on the
Mm-hmm.
countryside. We still know. But this is a mature, big Western economy. Such a large proportion of the population does not have purchasing power to make just a short 2 or 3 day travel. Wow. Yeah. And this is these things that are getting intensified by what we see. This was a sort of short-term oil crisis, yeah, oil price crisis. Fortunately, not so often by war, yeah, but it happens. This kind of developments happens in the world now and then, and economies need to be strong enough to compensate. Yeah.
Mm-hmm.
So this is what we see. Yeah. So interesting, and this is a bit sort of about when we talk about the time after the oil price shock,
Yes.
and we simply need to say it again. The European Central Bank had a perfect timing, and now we are talking ironically. They hiked the rates on the day that U.S. and Iran they signed the peace contract, yeah, and it was obvious for each and everybody that the oil price would simply go lower.
Mm-hmm.
There they hiked due to higher oil prices, energy prices.
Yeah.
But anyway, okay, yeah,
It's not looking great for them.
good, yeah. Okay, well, anyway, let's talk about the sunshine. As mentioned, continental Europe, they have as absolute terms a lot of sunshine, but
Yeah.
here we mean in the financial markets. So are we more happy after the oil price is down again? Or
Definitely, of course, lower oil prices are beneficial for the world, for the markets. For Asia particularly, it's very welcome news considering how much we rely on imported oil. And now that that appears to be out of the way as a problem 4 months in, it's definitely
Mhm.
welcome. We would definitely see better prospects for consumption and investments possibly as well in the next few weeks or in months and continuing barring any other black swan event. So yes, better view of the sunshine here in Asia. I guess as well, it is welcome news for the old economies of the West as well. Although affordability and recovery in consumption patterns probably won't be as swift and automatic as it would be for the Asian households, Peter.
But no doubt, it will cheer up some households across the world
Mm-hmm.
and bring back more stability. And we like to look at the households' purchasing power, and particularly where the economies where there's some room movement. It is good news, yeah. It will not bring the mood at the same level as it were for
Mm-hmm.
just 4 months. But
Yes.
we still like risk. We still like to overweight to risk, and we are not so afraid of the world getting headwinds right now. The prospect is still that short-term interest rates could go up. We're looking a lot to the US there, but it's not a danger in our predominantly positive outlook. Yeah. So this is where we are, and it's not that bad at all.
Yes. That's always good to hear. Thank you, Peter, for sharing your insights with us. And of course, thank you to our listeners, and we'll be back next week.
Yes, thank you. It was good.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Lundgreen's Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts. Lundgreen's Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.